Welcome to the Goals-Based Investing podcast series. I'm flying solo today, and I wanted to focus on what were the lessons learned in 2022, and what are the things that I'm focused on as we begin 2023. First, as we focus on 2022, I think the one thing that caught everyone by surprise was the utter failure of the 60-40 portfolio. Of course, for many years, we thought of that great 60-40 portfolio as providing growth and income. And because stocks and bonds didn't move in lockstep with one another, you got some level of diversification. What did we experience in 2022? Well, in fact, what we experienced was double-digit negative returns from both stocks and bonds. And the 60-40 portfolio had one of its worst years ever. So to begin 2023, and we look at the backdrop, which was clearly a challenging year in 2022, there's a couple things that I'm focused on. One, in 2022, we saw the Fed very aggressively raise rates. In fact, they raised 425 basis points, and we saw 75 basis point increments, which is virtually unheard of in the history of the Fed. The question for 2023 is, when will they stop? And will they, in fact, reverse course sometime in the coming year? The other thing is, with the Fed being potentially late to the game and this aggressive tightening into a market, there are rising concerns about a recession. And some would argue we're already in a recession. But I think that's one of the things we'll be looking at very carefully in 2023 is, if we get a recession, how deep? Is it the typical garden variety recession, or could it be more severe? And I think we have to see how that all plays out. We will be paying attention to the conflict in Ukraine. That isn't ending anytime soon here. I think the Ukrainians have shown to be extremely resilient. Russia has kind of upped the ante a little bit here. I suspect that conflict is going to continue for quite some time. We'll have to see how it ends, and we'll have to see what sort of residual damage comes out of that. I think another dynamic that will be very interesting to watch in the coming year is China. China has made their intention to be a global leader, very apparent with their words and their actions. Clearly, there's an alliance with Russia and China. And I think we're trying to understand how we all peacefully coexist. They're a very big player on the world stage economically, militarily, and I think we have to see whether we can peacefully coexist and find some sort of working relationship, or whether the tensions will continue to rise. And I think that's a really important thing to follow as the year unfolds here. I think what will be interesting to see is whether Congress can get anything done. There's certainly a lot of rhetoric, but we do have a divided House and Senate, and it's not clear that there'll be any big sweeping changes, although as we begin the year, everyone has the rhetoric of, big changes that will come. I think the reality is, in divided government, often we see very little change happening, and that might be the best thing, given some of the dramatic changes that we've seen over the last several years. I think we'll be looking carefully at equity returns, and in most capital market expectations that I look at are anticipating substantially lower equity returns over the next 10 to 15 years. And I think that's pretty logical when we had the longest bull run ever, and we had a lot of excesses in the market. I think many of the excesses were taken out in 2022, but I still think the global economies are going to have some challenges in years to come. And the anticipation is equity returns will likely be lower than their long-term historical average. I think one of the things that probably caught a lot of people off guard last year was inflation. And it probably shouldn't have, just because we had pretty high inflation going into 2022. Inflation was exacerbated by the Russian conflict and the impact of energy prices here and abroad. Inflation reached its highest level in nearly 40 years during 2022. There are some signs that maybe we have peaked with inflation, but clearly we're a long ways from the target inflation rate. So we'll have to see how inflation plays out and how long it takes us to get to that target rate. I would anticipate that 2023, it will still be well above the long-term average, and it will probably be well above where the Fed would like it to be. But the question is, how do we get it back to where they would like it over the long run? I think one of the lessons of 2022, and something that I've certainly been preaching for many, many years, is when we have these challenging environments, when the equity returns are low, or when yields are difficult to find in portfolios, when volatility peaks its ugly head, and when we have to deal with inflation, alternatives are ideally suited for an environment like that. And alternatives broadly serve many different roles in client portfolios. It's something I've been writing about and speaking about for many, many decades. But I think what I'm curious about is, now that we're starting to get more tools come into the marketplace, will we in fact start to see advisors embrace alternatives in a more meaningful way? My hope and expectation is that they will, and my hope and expectation will be that they in fact have a positive experience and not only dabble a little bit and dip their toe in the water, but start to use them as more viable tools as they think about building portfolios. There are two smaller issues that I'm watching here, and again, I don't know that these are going to impact the markets directly, but I am looking at the fallout of the FTX fraud, and I don't know how to describe it other than a fraud. That's clearly what happened here. But I think what it did is it certainly impacted the consumer perception of the crypto markets generally. And unfortunately, it brought back some fears about, is the market fair? Is the market rigged? There's been a lot of comparisons to the Madoff scandal. In fact, in a recent blog, I made that comparison as well. So we'll have to see what sort of ripple effect that has through the markets, whether it be in investor trust, whether it be in the overall growth of the crypto market, or whether as this investigation goes on, we discover that there are other bad actors who were participating along with the FTS main players. So we'll see how that plays out, but I suspect that will certainly have some headlines over the coming year. And then the last thing, something that I certainly alluded to in my book, and we're still watching very carefully, is artificial intelligence. And we've seen other sectors of the market where AI has really become a meaningful way of displacing players in the marketplace, or changing dramatically the way that consumers do business. And I think it would be interesting. We've certainly heard the noise about AI coming to the financial services market for many, many years. We haven't seen a lot beyond, kind of the crude sort of robo offerings that everyone seems to have at their disposal now. But I do think it's interesting as we anticipate, 2023 and the changes to come, whether we'll actually start to see some progress on that front. So those are the main things that I'm looking at throughout the year. And as every year, you think you kind of got the areas of focus kind of nailed. I suspect there could be some surprises in the coming year. They could be geopolitical oriented. It could be the Fed doing something out of character, something that the market isn't anticipating right now. We could have some global shocks, and those things are very difficult to anticipate, but clearly we need to be in a position to react to it. And then I think the last thing is, we have to see how America and the global economies respond to what has been a very challenging environment here. I think the global economies are potentially looking at recessions, and it could be that different parts of the world get different degrees of recession. It could be more severe in one part of the world than the other. And I think it's also likely that it could be that there's a ripple effect. Certainly what happens here could impact Europe, could impact Asia, and could impact other parts of the world. So I think there's enough to really focus on here. I think 2023 sets up to be a fairly challenging year. And I'll go back to my earlier comment. I hope that advisors are thinking about expanding their toolbox, thinking about what role alternatives can play as we think about how we're navigating these challenging environments, and how we provide the ability for investors to kind of insulate themselves for some of these shocks that are likely to come over time. But I look forward to seeing how it all plays out. This is a fascinating market we all live in and work in, and I think 2023 will be a very challenging year. Good luck investing, and we'll see how it all plays out.